if I ever got impeached, I think the market would crash. I think everybody would be very poor. Because without this thinking, you would see numbers that you wouldn't believe. In reverse, I got rid of regulations. The tax cut was a tremendous thing.
Okay, folks, that was President Trump from an interview last week, and he stated, as you heard, that he predicted that there would be a market crash should the Congress impeach him. One thing needs to happen first before the Congress impeaches the president. You must have a turnover in the House of Representatives to the Democrats. They must take control, or else in all probability, unless, of course, there is a Watergate level type of event that takes place, you're not going to get the Republicans to defect from the president. Even Lindsey Graham, no friend of the president by any stretch of the imagination, actually backed him up last week. Now, is he right? Is the president right that the economy or the stock market would crash? Yeah. Now, before I go into my reasons why, as to why I believe the stock market would crash, let's set something aside here. The payoff of bimbos by the president, and not just coming forth and saying, you know what, I did it, I was wrong, learning from history of all the other presidents that have gone before him and all the other executives caught with their hand in the cookie jar for doing something embarrassing. Not so much illegal, but embarrassing. He should have put it behind him. He didn't. He failed at that level. And it's humiliating. But does it rise to the level of crimes and misdemeanors, which would result in him being brought up in the House of Representatives for impeachment? No, I don't think so. But that won't stop the Democrats if you get a turnover in the House. Does he get convicted in the Senate? No, of course not. But I don't think that's the end game here. I don't think that Mueller is going for the Russian collusion thing anymore. You don't hear anything about Russians. There are no Russians. The only Russians that you found were on Hillary's side, and she's not even under investigation. I think if there's one conclusion that we could draw this far into the investigation of President Trump, is that there is a two-tier system of justice in the United States now. You have all the evidence, and not even anecdotal, hard evidence of conspiracy to undermine a presidency both prior to and after the election of President Trump, yet nobody cares. Nobody cares. You have hundreds of millions of dollars traded hands between the Russians and the Clinton Foundation. Nobody cares. You have no evidence whatsoever of collusion between the Russians and President Trump or the Trump campaign, yet nobody cares. And the investigation moves on. Now, if they do succeed in removing the president, not even necessarily impeaching him, I don't think they're even going to go for that. I think they're going to go for a resignation. How would they do that? Well, last week, what they did is they granted immunity to the Trump organization's CFO of 50-odd years. This guy knows where all the bodies are buried, and he wouldn't have gotten immunity were he unable to provide evidence against the president. Now, there's only, were I the president, one thing I would be concerned about, and the big leverage is this. Back when the Trump organization, many years ago, I believe they had a $1 billion loss carried forward from the bankruptcy of the casino business down in Atlantic City. Now, that $1 billion loss carried forward is still being run off. Now, if they could say, You know, you never should have been allowed to take that deduction. Therefore, not only do you owe the money that you've deducted from your taxes all these years, you also owe the penalties and interest on top of it. That would, for all intents and purposes, wipe out the Trump organization. Now, if Mueller presents him with this option, the question then becomes, does he step down as president of the United States in order to save his business and his family? You know, the guy lives for his business. He lives for his family. There's a good chance that he might accept that offer rather than see everything that he's worked for and his father worked for simply wiped out. So that's my thesis. We'll see whether or not that's going to play out. But back to the opening statement from President Trump about whether or not the stock market would collapse. Yeah, sure it would. Of course it would. I think that even absent an impeachment vote, the fact that the Congress or the House of Representatives is flipped over to Democrat will be devastating for the stock market, because the Democrats know only one thing, and that is to tax and spend. Perhaps that's two things. Also throw in there, they love big government. So what will be the outcome of a flip of the House to Democratic hands? You're going to see the dollar come under a ton of pressure. And of course, if impeached, I don't think that the Senate will vote to remove the president, convict him, I should say. Now, the end game, I believe, is that Mueller, you can forget about the Russian investigation. That's done. All it's about now is dismantling the Trump organization and trying to have that loss carry forward pulled in order to undermine the organization, threaten to make it go bankrupt, and force the president to resign his presidency. Now, even if the president is not impeached, I still think that this economy in 2019 is going to hit a brick wall. You saw durable goods orders last week get hammered, existing home sales hammered, new home sales hammered. So why did the stock market rally last week on bad economic news? Jay Powell. That's what I was saying all last week to members. Watch out for Jay Powell's testimony, because President Trump is not stupid. He is watching the bond market. He is watching the economic data. He knows that this bull market, which is now at it's the longest in history, effective last week. He knows that this bull market and this economy are on its last legs. He needs to get through the midterms, and he also needs to get reelected. So what does he need? He needs an accommodative Federal Reserve, and Jay Powell appears as though he's ready to throw the president a life preserver. But that did not help the yield curve yesterday. Remember last week on Best Stock Charts, I mentioned the yield curve. As a matter of fact, let me play what I said last week. We are about 2 bips away from taking out the lows of July. Now, we were higher on the month. We put in a new monthly high for the month of August, but we have since given up those gains, and we even retraced down to the low of the month of July, which was 0.24, the spread between the 2s and 10-year bonds. So the bond market is sending you a signal. And there's really nothing to be done here except to observe until such time as the yield curve inverts, much as it did back here, 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 and here. What do all 4 of these time periods have in common? Recession. Next week, this bull market will become the longest bull market in history. When you add the observations of what the bond market is sending us, along with the fact that you have the largest short interest in gold in all of history of the tracking of short interest of gold. It's a very overcrowded trade, and we know that gold trades inversely of
the U.S. dollar. What did the U.S. dollar do last week? It flashed a bearish key reversal. This is the Dixie. Take a look at the UUP, the dollar bull ETF. It too flashed a bearish key reversal at resistance. Now, do I expect the dollar to go straight down from here? No. Historically, it'll attempt to try to put in new highs. But if those rallies do in fact fade, you will see confidence in the dollar rally fade. And when that occurs, you're going to see shorts begin to cover gold and the gold miners.
Okay, so fast forward to this week, and you could see that the yield curve collapsed last week. We closed out last week at 0.19. The spread between the 2-year Treasury bond yield and the 10-year Treasury bond yield. The lowest since August 2007. 11 years since the financial crisis and the last full-fledged recession. And we are rapidly approaching an inversion of the yield curve. And honestly, I don't think that the president has until 2019 before you get an inversion of the yield curve. So what's the game plan here? Nothing. The market is still going to go higher until such time as they think that the president is under threat of removal from office. And if you go back and you take a look at CNBC's comments with regard to the president stated that were he to be impeached, the market would crash. And they referenced the fact that Paul Manafort, who was convicted last week of 8 of the 18 charges, and Cohen, his former attorney, copped a plea, and it had no impact on the market. Sure, because Manafort has zero to do with the president and the investigation. So why would the stock market react? They just put that out there to make you think that there's something there, and there's not. Talk about fake news. And Cohen, what's the threat to the president here? Has he done anything worse than what Barack Obama did? No, and he got a fine. He remained president. Nobody even talked about impeachment. So why would the markets shimmer and shake? However, if they see the end run that Mueller's playing, that I just discussed with regard to trying to take down the Trump organization, that is a different story. That is the government gone amok. And you will not only lose faith in the justice system, you will see a loss of faith in our democracy. Moving on to the charts of the week. How was our week last week? You know, I didn't even mention it. Please hit the subscribe button, leave a comment. And if you want to skip around to see where the symbols are that I'm going to review, I post them in order in which I review them above if you're watching this on the website, or below in the description area if you're watching this on Facebook and YouTube. Actually, I think it's above on Facebook. I don't know, but it's there. All right, so how was our week last week? It was really good. Let's begin with a conversation with regard to NUGT, of which we are long. I spent a lot of time over the past week talking about gold and the gold stocks. NUGT being a leveraged ETF, putting you long of the gold miners. We are long of it. We were buying during this sell-off. And here's what I had to say to members on the week ahead commentary, which I'll be putting out to members tomorrow. If you're not currently a member, sign up, 14-day free trial offer, cancel at any time. Here's what I had to say to members on the week ahead commentary last Sunday.
Let's talk positions, Nugget. So on Friday, we saw an accumulation day, as noted by the volume bars. We were up about nearly 8.5% on the day. Stokes are now hooking up. I think that we could trade within this trading range for the next couple of days, but I do believe that we are going to get a short squeeze fairly soon. Now, what I had hoped for didn't occur. I was hoping for a new daily low on Friday and then a bullish key reversal. We didn't get it. We got an inside day, which is not my favorite type of way to alleviate an extreme oversold condition. That extreme oversold condition is now gone. We closed out the day on Friday at 22.33 on RSI. Weekly chart, we closed slightly below The January 16 lows, not loving that. Volume to the downside, extraordinarily high last week. So is the selling done on NUGT? I think in all probability, the shares will not see new weekly lows. Might they retest the lows of last week? Sure. Might they gap up this week? Sure. Anything can happen at this point. 2-hour chart. All right, so we spoke about this chart last week. I said I wanted to see a breakout above this upper band of resistance. We got it. What's next? All right, one of two things. Either A, we pull back and successfully retest this support level or the 1259 level, or we just simply begin to break out on a weak U.S. dollar. Absent that weak U.S. dollar, I would not expect NUGT to move higher early next week. Short-term target for NUGT, filling up this gap here up and into the 1650 level, and we may just sell some of our position into that rally in anticipation of a rally in the U.S. dollar, and we'll watch for a double top on the U.S. dollar and a pullback on NUGT and a retest of the lows or a higher low, one of the two, and we'll look to add back those shares we sold on any rally. The SOXS, we have a profit here. I spoke about the semiconductor sector earlier. A very weak chart on a weekly basis. The price action on SOXS was not good on Friday. Yes, we closed higher, but we closed well off the highs of the day. So that's a bit of a concern. I think we'll probably get a pullback on the SOXS. I may just book profits and look to get back in at a lower price or on a clean break to a new weekly low on the SMH. Remain long.
So you could see that last week we did not put in a new weekly low. We did come very close to retesting the prior low, so my call for the most part was accurate. Now, midweek, I said, you know, guys, we're not going to see a straight shot higher here on the NUGT. I think that we're going to get a pullback. I am not a believer in V-shaped recoveries, but that pullback would be a good thing were we to rally and then move back above the 1434 level. And we did that on Friday. We got the pullback on Thursday. We rallied on Friday. We could not hold the pivot point at 1434. We did see shorts begin to get squeezed in the gold and gold mining stocks. Simply take a look at the GDX. It rallied last week over 2.5%. But again, it couldn't close above its pivot point. So I think we're going to consolidate here a little bit, but I do believe that in all probability we're heading higher and that we've seen the low. Let's take a look at the GLD. Now the GLD technically performed better than the gold mining stocks. Why? It's because we pulled back, put in a higher low, and we closed above the pivot point, which was at 112.88 on gold. Let's take a look at the price on gold. That pivot point was at 112.08. We rallied. We closed right into resistance. So we may not push above this resistance level right away. We may consolidate a bit, but I think that we are going to proceed higher. Now, I mentioned last week, as you heard in the clip of NUGT, that we needed a weaker U.S. dollar, and I talked about the weaker U.S. dollar. Last week, we saw a bearish key reversal. Let's bring the chart up. Dollar Bull ETF, UUP. We spoke about this last week, that we had a bearish key reversal. It was probably the top. I had expected an attempted rally this coming week. We didn't even get that. It was so weak. And we just broke down to new week-over-week lows. And in all probability, we are heading lower here. We're rolling over on Stokes. We now have a lower low. Volume was not that bad last week, surprising. I think you just had a buyer's strike of the dollar. And Jay Powell's testimony really just put the nail in the coffin. Because if you take a look at a daily chart of the dollar, it had a good day on Thursday, but As I always say to members, when you have both lines on Stokes trading down below the 50 level, rallies tend to fade. So you had this bullish key reversal, no follow through. It's because the dollar was losing momentum. And then you saw a breakdown to fresh daily lows on Friday. Now, as to Best Buy, we booked profits last week. Here's what I had to say last week about Best Buy. We were looking to put the trade on, and here's my rationale for putting on that trade.
Best Buy weekly chart looks outstanding. We held support. Stokes are rising. RSI kind of stalling a little bit, but net rising. Down volume was light last week. So a very tight consolidation here. I think that these shares can be bought on a rally up and through 79.41 per share, daily chart. Now on Friday, we had a bullish key reversal. Here's that 79.41 level. That would mark a new 52-week high and probably an all-time high. And that means that there is no overhead supply above. Let's go to a monthly chart and validate. In fact, let's use a quarterly chart. Yep. No overhead supply above. So a breakout above 79.41 will be a very, very bullish event.
Okay, so that was from the week ahead commentary. We discussed it with members, our strategy of as to when we were going to execute on Best Buy. So why do we book profits? We book profits because on a weekly and daily basis, I'll go to the daily chart in a moment, but on a weekly basis, we hit the third standard deviation Bollinger Band, and we did the same on the daily chart. You could see that we hit the third standard deviation Bollinger Band. We sold very close to the top, expecting a pullback, and we flashed a bearish key reversal on the day that day. Now, on the 23rd, we did manage to put on a rally, but we didn't get the closing follow-through on Friday. So we're going to consolidate here a bit. I still like Best Buy. It is on our watch list. It will remain on our watch list for the short term anyway. And we will look to reopen the position. Members will talk about strategy tomorrow on the week ahead commentary. The next chart up, the SOXS. We were long of the SOXS as we went into last week's best stock charts and the week ahead commentary. And here's what I had to say to members about strategy regarding the SOXS on the week ahead commentary last Sunday.
Short-term target, the SOXS. We have a profit here. I spoke about the semiconductor sector earlier. A very weak chart on a weekly basis. The price action on SOXS was not good on Friday. Yes, we closed higher, but we closed well off the highs of the day. So that's a bit of a concern. I think we'll probably get a pullback on the SOXS. I may just book profits and look to get back in at a lower price or on a clean break to a new weekly low on the SMH.
All right, so you could see that last week on Monday, they tried to rally it. You saw topping action, first out, best out. We booked our profits. We moved to the sidelines. And you could see that the shares pulled back. Now, I mentioned that we would look to get back in on a pullback, and that's exactly what our strategy remains. So, members, more to come regarding SOXS tomorrow on the week ahead commentary. The next chart up, Align Technology. I haven't spoken about this one in a while, but we have been consolidating nicely. We are in a very tight triangle formation. We're looking for a breakout here. Double bottom setup on Stokes, and they're above the 80 level. I simply love that. This is like a coiled spring. You also have a double bottom setup on RSI, and we were poised for a breakout. I think that we're breaking out, in all probability, this coming week, assuming that the market does not fall apart. So, members, more to come with regard to strategy on Align Technologies tomorrow on the week ahead commentary. CVLT, weekly chart. This is Commvault Systems, weekly chart. The RSI is looking really good. We had pulled back. Now we're beginning to put in higher lows and higher highs. That's good stuff. The one concern here is that I have these Stokes, which are now beginning to hook back up. But they're still down below the 50 level, so I don't trust them yet. I like to see a pullback and then a higher low, and then a higher high get put in. And then once we get above 50 level, I would be a bit more excited. But you never know. We could just go skyrocketing straight up, assuming that we get a breakout above this upper band of resistance on price. I think we're very close to it. But I would wait for that breakout. Members, we're going to talk more about the daily chart and strategy with regard to CVLT tomorrow on the week ahead commentary. Lululemon, I discussed this one last week. I mentioned that in all probability that we would break out last week. In fact, let's play what I had to say to members last week on the week ahead commentary with regard to strategy on LULU.
Lululemon. This can be bought on a tick above 131.88. I love this chart. And it's not so much the daily chart and this fact that the Stokes are rising, RSI is rising, but more so the weekly chart and this retest of the breakout point. It's a validation that the breakout is in all probability going to hold. So Lululemon, loving it. So to recap, if we rally up and through 131.88, it's a buy. If we break down below last week's lows of 125.05, we stop out.
So as you can see, we got the continuation breakout. We're a bit oversold in RSI, but I think we could still head higher here. So what we're looking for, daily chart, is a continuation breakout. We don't have that yet. In fact, a bit of concern on Friday with regard to a bit of topping action. So I would only buy, at current, I would only buy LULU on a continuation breakout. Unless, of course, it pulls back and it finds support at either this support level here at, let's call it 130.50, or against the rising 20 or 50 period moving average. But as it stands right now, I want to see volume rise and a breakout on the shares week over week. So members, more to come tomorrow with regard to LULU. We may drill down to an intraday chart and see how it's setting up for Monday's trade. Steve Madden, SHOO. We spoke about this one last week. We got the breakout, which we expected out of this bull flag formation. It's a continuation breakout pattern. We moved higher. A bit of a doji star formation on Friday. That's a sign of indecision. I don't think that if we get a pullback, it's going to be a significant one. I think that we're moving higher here on Steve Madden. That bearish divergence that we had on Ultimate Oscillator has now been negated. The same deal here with RSI. We had a bearish divergence going on. It is now negated. So members, we'll talk tomorrow about a strategy with regard to Steve Madden. We'll talk about the intraday charts and when I would want to pull the trigger on SHOO. So more to come tomorrow. Here's one I haven't spoken about in a while because the energy sector became weak, but that weakness appears now to be over. And EC, Ecopetrol, broke out last week above this upper band of resistance on a weekly basis. I love this chart. Huge cup, handle formation forming. I think that we are moving a lot higher here on EC. So members, we're going to talk about the daily chart and an entry strategy tomorrow on the week ahead commentary. So stay tuned for more. Nu Skin. You know, I've mentioned a couple of times today about the stochastics and when they're trading down below 50, how really paranoid I get about being long of any stock where you have momentum leaving the shares, right? You don't want to see that. And a perfect case in point was Nu Skin. Here's what I had to say last week with regard to the stochastics and Nu Skin, and it was on our watch list, and it remains on our watch list, but I was concerned about the Stokes. Here's what I had to say.
Nu Skin, weekly chart. All right, so let's take a look at a daily chart, and then we'll come back to the weekly. So you can see here on a daily basis, we have RSI, which found support at 50. Both lines on Stokes are trading down below 50. That's my concern here. So the key is if we decide to put on a trade here, it has to be late in the day. I'm talking the last few minutes of the day to make sure that if the shares are rallying, which would be the only reason why we'd want to buy it, that they are closing at or near the highs of the day. Now, we had a bullish reversal day on Friday, but we know what happens when you have both lines on Stokes trading down below the 50 level. A bullish day like this can turn into an absolute nightmare the following day. It could just simply open up down below the support level, the lows of Friday. So we need to see a rally on NUS and a close above $80 per share. Up volume was horrible on Friday.
All right, so here's the same daily chart. Here's where we were last week. We had a good early part of the week, but Stokes rolled over, broke down, never got above the 50 level, and we closed at the lows, or very close to the lows of the week. And in fact, we closed down below a support level on a daily basis. Now, on a weekly basis, we're still holding support. It's under pressure. We had a bearish key reversal last week. Stokes on a weekly basis are rolling over. So we're very close to removing new skin. We'll give it another week, see whether or not you have any buyers that step in and correct the technical damage that's been done here. But the lesson learned here, folks, is I don't care if you're a member, not a member. I don't like to see people lose money. And the lesson here is don't go opening up a position or adding to a position when you have your Stokes trading down below the 50 level. You should be looking to add to your position as they begin to hook back up, roll over, then begin to put in higher lows and higher highs. So now is not the time to go catching a falling knife on new skin, because it is very close to breaking down. I'm not saying it will, but the probabilities versus last week are considerably higher. Folks, if you're not currently a member, take advantage of the 14-day free trial offer. If you're not into the trade alerts, that's fine. You can simply get the week-ahead commentary and access to the forum using our bronze level membership. So take advantage of the 14-day free trial offer. And if you're not ready yet, that's cool. Enter your email address on the website. We hate spam too. You'll never miss a new commentary I put out. If you watch this on Facebook, make sure to leave a comment, smash that like button, and hit that bell, that notification bell. You'll get notified by push notification that a new video has been added to the YouTube channel. And everybody have a really great remainder of your weekend and have a profitable trading week. Be well.